Today, I'm coming to you with a passive income update. Those four investments that paid out in the month of April. First, we're going to start off with an earnings update on Main Street Capital and Realty Income. So, some of these investments pay monthly, some pay quarterly. Some investments, dividends are quite insignificant, and there is a reason why, but we're going to go over all of it. If you're new here, make sure to like, subscribe, hit that notification bell. Now, let's get into the video. First up, let's take a look at Main Street Capital. Ticker symbol MAIN, MAIN. For those of you who haven't heard of them, Main Street Capital is a BDC, a business development company. Think of them as a lender to small and middle-sized businesses. They basically help companies get cash they need in order to grow. And in return, they make money on the interest and fees, and they pass some of that on to us, the investors. So they just had their earnings this past week. I have loved this company. It was one of my original three picks when I started building my passive income portfolio, along with Realty Income and SPHD. All three pay monthly, which just makes it even easier to see that compound interest working. That's 12 paychecks every year. And they even pay additional bonus dividends from time to time. But overall, Main Street just sticks to what it does best: lend money, collect the interest, and cut the checks out to us, the shareholders. So when it comes to their earnings, they made a tiny profit. Their revenue was somewhat disappointing. They pulled in 137.05 million. Compared to a year ago, they were at 131.61 million. So they came in slightly below what experts expected. In the past four quarters, they only beat earnings expectations once. So investors might be unsure about their reliability going forward. Having this in my portfolio, I like to have diversification, a mix of different things. And right now, this particular sector is not thriving. Taking a look here, you see those are currently at the bottom 28%. But this is how things go. There are going to be certain sectors that are more heavily impacted due to economic and markets conditions. But overall, Main Street didn't do terribly, but they didn't blow anyone away with their numbers. Investors are waiting to see their future earnings and what it looks like going forward. Right now, experts aren't saying buy. It is rated a hold, analysts here on the Moomoo Investing app, and it has an average price target of $58 and a high of 62. Year to date, it's down 9.61%. And let's look at that compared to VOO, which is an ETF that tracks the S&P 500. Year to date, it's down 3.74%. So down pretty significantly on the year and has not rebounded like some of the other tech stocks and ETFs. So let's zoom out and just take a look. Over the last 5 years, this investment is up 96.77%. And when it comes to my investment, I'm up 25.81%, and I currently have 40.5 shares in my portfolio. So, as a dividend paying investment, it has not disappointed. Along with the share appreciation, I have always been steadily growing until this most recent pullback. Okay, so now on to Realty Income, and they also just had their earnings. Literally brands itself as the monthly paying dividend company. Their ticker symbol O, a totally different investment than Main Street Capital. If Main Street Capital lends money out to companies, Realty Income is the one collecting the rent from them. They are a REIT, a real estate investment trust, and they own thousands of properties like Walgreens, 7-Eleven, Dollar General, and even the gyms and movie theaters in your area. Every month, those businesses pay rent, and Realty Income gives us, the shareholders, a piece of that. In the month of April, they declared their 658th monthly dividend. That's more than 54 years of paying investors every single month. They continue to grow their dividend. It's up about 3.4% from last year. That might not sound like much, but it all adds up, especially if you are reinvesting those dividends. Now, let's go over and take a look at what happened with their earnings this week. Realty Income reported $1.3 billion in revenue for the quarter ended March 2025. That's up 9.5% from last year. They slightly beat revenue expectations. Their rental income is solid, pretty much exactly what analysts predicted. So when it comes to Realty Income year to date, they're up 6.14%. Over the last month, they're up 5.02%. Again, making a quick comparison to the S&P 500, which is down 3.74% on the year. Overall, Realty Income is making more money. It's growing fast, but some earnings numbers are lower than expected. Investors are watching closely, but not making any moves yet. About 86% of analysts rate this one a hold and 14% rated as a buy. It currently has an average price target of about $60.54 and a high of 68. When it comes to both of these investments, we will see in time how the tariffs and everything that's going on could potentially affect these businesses, as well as the moves that they're making to grow by taking out loans with companies like Main Street Capital. So when it comes to my investment into Realty Income, I'm currently down about 2%, and I'm almost at 109 shares in my main dividend portfolio. So Realty Income is overall one of those set it and forget it type of investments. If you just want to have consistent, steady income, it's not flashy, it's not fancy, but at times having those dividends rolling in is always a good thing and helpful to build your portfolio. And even though this investment has not thrived in my particular time frame of investing into it, as far as the share price, I have been getting those steady dividends. So, do you have any REITs in your portfolio? Did you know that you can get exposure to real estate in this way instead of owning property directly? Let me know in the comments. Now, let's take a quick look at SPHD, another monthly paying dividend investment that I have. And this is Invesco's S&P 500 high dividend, low volatility ETF. It's an exchange traded funds, a basket of stocks, carefully picked group of 50 companies that pay above average dividends and don't bounce up and down in price too much. Think of them as just a calm, reliable group of regular companies, Coca-Cola, utility companies, insurance companies, basically built for stability. They increased their dividend in the month of March. They're on pace for a solid about 3% annual yield, and just something easy that I've added to my portfolio that mitigates the risk. I love incorporating ETFs because it doesn't have to make you bet on just one single company. This is 50 strong paying dividend companies through one investment choice. Nothing complicated here. Now back to take a look at the share price year to date. It's down 1.99% over the past month, up 1.85%. When it comes to my portfolio, I'm up 13% and I have 38.5 shares in my portfolio. And the last company that I received a dividend for in the month of April is NVIDIA. Now, NVIDIA is not an investment that I added into my portfolio for dividends, but there are a few in there that pay dividends, like Apple, which will be coming up next week, and Microsoft, for example. So, some of these tech companies that I added as a part of my growth portfolio also pay a dividend. So, I've been tracking them along with my chosen dividend investments. Very small dividend, but when tech companies do mature, they may in time raise their dividends. So let me know, do you have a few of these in your portfolio? Investments that you added for growth that you're also receiving a small dividend from? Now, here's a look at my dividends received year to date. April was a smaller month. I received $45.70, with my largest dividend coming from those 100 plus shares of Realty Income that I have over in my portfolio on Moomoo. I received $29.07 there. And year to date, I've received $311.22 from various companies. My chosen dividend investments like SCHD, SPHD, Maine, and Realty Income, as well as those tech stocks, like I mentioned, that also pay a dividend. You see here Microsoft, Google, Meta, and my foundational ETFs that I have, like VOO and VTI, also pay dividends. That's it for today's update. A look at the earnings from Realty Income as well as Main Street, both known for paying those consistent dividends as well as increasing them regularly. Something I've added to my portfolio for stability as well as income. So, what does all this mean? Whether your goal is income or growth, do your research and decide what combination of investments works for you to achieve that goal. Combine them wisely, put in the work to be consistent with building up your positions. I went about it by buying one share weekly, but you have to invest what works for you and your budget. Just be consistent with it, even if it's $10 at a time. It might not sound like much, but give it a few years and you will really see what you can build up when it comes to your investments. I'm glad that I started even with small amounts like $5 and $10 or one share of my main dividend paying investments that we talk about today, which was costing me about $40 to $60 per week to commit to one share. But I stuck with it. But however you do it, just stay consistent. In time, I'm sure you'll be glad that you put that work in. I hope you enjoyed this video. I am Lisa J. Stocks. If you're not already, subscribe, like, hit that notification bell. Check out my referral links for Mumu and Weevil. And you can also support the channel by joining channel membership. Thanks for watching. Okay, bye.